Get ready to embark on an economic journey as we unveil the heartbeats of the Rwandan business landscape. This is the Business Age, your front row seat to the economic renaissance of the land of 1,000 hills. Join us as we traverse the bustling markets of Kigali, delve into the success stories of Rwandan entrepreneurs, and explore the dynamic forces shaping the nation's economy. From the boardrooms to the street vendors, we'll bring you the voices of the visionaries and the minds behind Rwanda's economic evolution. Discover the fusion of tradition and technology, witness the agricultural innovations transforming rural communities, and explore the cutting-edge innovations propelling Rwanda into a new era of economic prosperity. From the city lights to the rural landscapes, every business is a story waiting to be told. Hello there. Thank you so much for tuning in to today's episode of The Business Age. On today's edition, we focus on how data is being integrated into the financial sector. We will speak to different market players to understand how data is revolutionizing the way financial institutions operate, make their decisions, and better serve their customers. You will be with me, Naringwa Fiona Motoni. By harnessing the power of data, institutions can drive innovation and create a more resilient and inclusive financial ecosystem.
Data is crucial in our days, and we know how it is one of the determinant factors that is driving decision making across sectors, and more importantly in the financial sector. One would imagine a company, a business, a bank or a financial institution that has information, like historical information, that has present information and future information. So it gives the opportunity to that business to really position in the market. So knowing the experience, past experience, positioning currently, but also predicting what the market would look like, so that data can be that a powerful tool for them to position and drive the market. But more specifically to the financial sector, data is currently being used as an important tool for risk management. Risk management, there are different types of risk, including market risk, operational risk, credit risk. All these are important risks that data analytics can really help sort. The other important component of the integration of the data in the financial sector is the customer segmentation. So data analytics is a powerful tool that helps segment or provide a disaggregation of different clients for different financial institutions. And by segmenting those clients by demographics, youth, by gender, by geographical locations, it also gives the opportunity to the bank or the financial sector to design products that are more specific to each category of clients. We all know that whenever we request for a loan, there is our information is reflected somewhere. So, and banks need to know our information, our footprints of every financial transaction that we do, and to make ourselves very credible in the eyes of the bank, so that they can give us loans. So that's in line with credit scoring, which is also another aspect where data is playing a very crucial role. It is also important to mention that portfolio management is another important component where the financial sector is capitalizing on data. And by portfolio management, we mean doing data and computing the required analysis so that investment can be very efficient, so we can know the opportunity where to invest more than the others, where the investment would bring more return than the other.
Data, over the years, we've all realized how data becomes so relevant. All developing countries, big companies, have been able to grow because of their ability to rely on well-informed, well-captured data. And that investment, definitely, you could start by the case of a country. At country level in Rwanda, the National Institute of Statistics started way back as just a department in the Ministry of Finance, which was just collecting basic information in terms of GDP prices. But then given the vision of the country to say, no, government programs, policies should be informed by evidence, there was a decision to actually establish a fully fledged independent institution, well-staffed, to cover all sectors. So at the country level, we capture statistics on all sectors of the economy. You could say education, justice, economy, literally all sectors. So that's the decision from the highest level, and the investment that goes with that. What's the return? The return is that our huge challenges have been, at least to a good level, been more addressed with reasonable resources. Meaning, given our limited means, resources as a country, seeing the progress that we've made, you can only do that when you are more focused, when you have priorities in how you make interventions and how you evaluate back interventions. So that data does inform targeting, data does inform prioritization, but also data helps to evaluate what is working and what's not working. So from a national perspective to a company, the same principles apply. A company that will obviously analyze well their clients, understand why some sectors are not doing well, that can only be achieved by relying on information. And that's really the significance of data. But I think the awareness is catching up across financial institutions, but also across other industries. We see CEOs and leaders more invested in using data. We see the high level of usage of our statistics that we produce and the interest. That's very positive. The statistics we produce are relevant not only for government, they are relevant for private sector, for education institutions, for other partners across.
As we know, data is the new oil. And so in Bank of Kigali, we've really invested into making sure that we become a data-driven organization. And for that, there's a lot that has been done in terms of first building the foundation of good data management. And that is by coming up with a data strategy that really gives a framework and a roadmap of what we want to achieve in terms of being, like I said, a data-driven organization. So we have a good number of initiatives. We've aggregated data. We want to make sure that we provide seamless digital products across. We want that when our customers are interacting with different applications, the like of our internet banking, our ATMs, they have synchronized data across. You want to see the same balance in all your the different features, all the different applications that you access. And for that, we've invested into data warehouses, into data analytics tools, but also, like I said, a good foundation in terms of having quality data, because you cannot achieve good analytics, we cannot do cross-selling or upselling if you do not have quality data.
Data might seem unfamiliar and complex, but let's break it down into simpler terms to see how it affects each of us.
I'll just take a very easy example of a customer. When you approach the bank and you want to open an account, so there are information that will gather from you, what we usually call KYC, know your customer, your name, your ID, your address, and that set of information is what we call data. And we have a lot of things around that data. We need to make sure that we keep it private. We need to make sure that when we collect that data, we secure it. You don't want to provide us with your data and then the next thing you find it on internet. So having that data and making sure that we put in place all security mechanisms to keep that data secure and to use it appropriately is what I will say, and I will give comfort to any of the customers or any of our the people who do not understand what data is and what it's supposed to help some of the organizations. What is it? And it's basically around that.
Looking, of course, the mission of the Access to Finance Rwanda, which is also promoting access to finance or leveraging or limiting all the barriers or removing all the barriers for people to access financial services. Data is very crucial. And there is one of the research that AFR in partnership with other actors do, which is Finscope. Of course, it's done in partnership with the Central Bank, the Ministry of Finance and Economic Planning, but also the National Institute of Statistics. It's an important tool that provides the insight on the market on how the financial inclusion stands, how different categories, be it women, youth, farmers in agriculture sector, how the use of digital services, but also the financial health in general. So data is very crucial to determine where to go, but also we do that in line with also informing decision making by the government in designing the strategy, especially for promoting financial access to financial services. But as I say, data is very crucial in on top of the segmentation that I was talking about, where the data would help design different products that are specific to different categories of people. But there is also data helps in recommending the appropriate products. So different the client have different behavior. So bank through the data analytics also provide create some specific products, innovative products that are meet the requirement, but also the behavior of different clients. So it's a very important that that is done, but also predictive analytics is also very key, so that to anticipate what is likely to happen on the market. So data is very key, so that we can predict, we can project, and know how the behavior of different clients would look like in 1 or 5 years. So in that case, I think data is very crucial and a very important component that helps us guide our decision making currently.
As it has been said, data integration is the process of combining data from different sources to provide a unified view for analysis and decision making. In the financial industry, this process has its challenges.
The challenges in harnessing data, I think these challenges, yes, could apply to the financial sector, but they apply to other sectors as well. And I think for me the first one is around capacity. Capacity in terms of financial institutions being able to get competent people in this new age of big data and data science, where there's huge volumes of transactions of data. It's an upgrade from the traditional basic statistics, where you need the right skills, the right people who understand those areas of data science to be able. So for example, if you think of a bank, there are millions of transactions in a month of people using digital channels, of people using over-the-counter services. All that data is so meaningful and rich, plus the data they collect as well from clients when opening accounts, when getting loans, the information all that information can be triangulated together to provide so much meaningful information in terms of product design, strategy, segmentation of customers. So the capacity of people you have in the financial institution to do that is so meaningful. But the other challenge, so the challenge around that is that we are seeing of recent a few universities begin to offer specific training in these fields, but we still have a way to go in terms of really having sufficient base of skilled people in that area. From my experience as the statistics office, we realize that you have to work with what you have, with the statisticians and others like who you have, and empower them and train them along the journey. So the way out is not to fold hands and say, well, there are no good data scientists. It's just to get the best that can be available, but invest in empowering them. And we're seeing that happen. In a span of 2 years, you see huge change in capabilities of people. So that's the way out to that. But the second challenge is in some financial institutions or some other institutions, the old systems probably also make it hard for the way to exploit the data that would be meaningful. So for example, if you think of a bank that has not in the past been recording information that they gather in loans daily, and it's just in files, it's just in papers because clients have to fill papers, that's an old way of capturing information, and it'll be hard to really make use of that kind of information. So how you migrate to digital ways to capture information and organize it better with more modern systems itself would be the foundation of, let alone you being able to use that information. So systems, we see that, let's say with SACCOs now, there's effort to migrate SACCOs from into digital systems. There's a system that's been launched across all SACCOs, or many SACCOs. That's important. That's really a worth investment. Because not only will it bring efficiencies, minimize errors, but also prevent fraud, it's a huge investment into capturing a wide variety of information about a big portion of the financial sector, which before wasn't being captured well. So systems, people would be for me the main challenges, and maybe the other one is actually also leaders being aware and seeing the value in this as an important aspect. Data as an important basis for decision making, whether operational decisions, whether strategic decisions, I think can also be a big difference. So if a CEO of a company or a firm, in this case a bank, sees how that is key, then they will invest in training people, they invest in setting up the units for of people to do that, compared to another CEO who may not really give it that value.
We even have a strong information security department that is just there to make sure that the security around data is fully in motion. So as much as we in the data management space, we aggregate data and we avail data, we collaborate with the information security team to make sure that all the security mechanisms are in place to take care of that data. So we invest in data encryption, for example, to make sure that when you are exchanging data from source to destination, it's fully encrypted, even at rest. And we do things we call, for example, data minimization. It means when we are, for example, getting data from the customers, we take the minimal data that is needed for the business and not a whole identification, but we'll take what is relevant to the business operations. We have other mechanisms in terms of making sure that we mask some of the data, for example, when we are doing exchange once again, and to ensure that the data are private. We also work hand in hand with the National Cybersecurity Authority to make sure that we also abide to the data privacy law and we comply, because compliance is also something that is very important for us to keep the image, but also to make sure that our customers are comfortable giving us their information and not to be able to expose them to any surprise or to the hackers. We also do a lot in terms of creating that awareness of the data privacy to our staff, our employees, and there are a good number of sessions and trainings that they go through just to remind them of the importance of really abiding to the data privacy law. These are very frequent trainings we provide to our employees to remind them about how to make sure that we keep customers' data secure.
There are several challenges currently, but I would talk about a few of them. In many cases, we would see that the quality of the data is not that good. Quality, but also integration of the data. So different individual financial service providers would keep their own data. So sharing, having platform where different data is shared is still problematic currently. Because of course there is the law that also dictates the data protection. So balancing the data protection, but also availing data for the public is, I think we need to really strike the balance on how we do that. But more specifically also there is an issue of capacity. Capacity in data analytics, the skills gaps that are still observable across the sector. But and this is one of the key things that we want to see, and FR is working on building the capacity of different actors on the market in data analytics and ensuring that the advanced data analytics is computed so that information is provided to the decision makers. So, but also there is an issue of infrastructure. Infrastructure means the facility for sharing data. So the systems that are available, sometimes they don't even talk to each other. So there is need for harmonizing those systems that are available so that they also meet the need of the market. So for our case, you would see that some of the microfinance institutions, especially those working in rural area, the SACCOs and so on, are not digitized. So without the digitization, without those facilities and infrastructure, digital infrastructure, it's very hard to really share data. So these are the key challenges that we're still observing.
To create a more inclusive sector, collaboration is crucial to enhance data integration capabilities.
Collaboration is something that is definitely very key. I think collaboration can be looked at in several ways. One is collaboration around empowering people. So we talked of a challenge of capacity. I think the financial sector needs, through there's associations for bankers, associations for insurance associations, there's need to invest in training of people who ultimately serve the whole financial sector. There can be collaboration to invest in training institutions which offer short courses, and those short courses would empower people. So for example, if you think of a basic statistician, they need some other trainings to be good in understanding the financial sector, but also in other levels of capabilities. That could take like a 6 months training. The same could be experts in insurance, this actuarials. The same could be experts in in various areas of need. So training, collaboration around training, where instead of each institution trying to do it on their own, which could be more costly, but are actually pulling together resources to establish training opportunities for either staff, but also for graduates, near graduates, because at the end of the day, the bigger the pool, the better for the wider sector. So collaboration around training is one for me. Collaboration around learnings of, there are always surveys that are happening, or information generated in the financial sector, likewise in other sectors. So the idea of collaborating in sharing learnings from those researches and studies, and there are institutions that are around in the country, like Access to Finance Rwanda, which facilitate these kinds of discussions. So having people, let's say the heads of strategy, the heads of technology, work together in terms of sharing knowledge. In the end, that learning from each other does not necessarily compromise competition. Competition could be looked at from another level, but knowledge sharing is definitely another second area, I would say, in terms of collaboration. But also when it comes to sharing data, there has been an initiative by the central bank to have a data warehouse in the last couple of years. And the expectation is that financial institutions connect to that warehouse and share information, transactional data. So the idea that each institution looks at that and says, well, we need to actually compile the data well, because if the right data is shared and collectively it is aggregated, that's a huge portfolio of information which ultimately can benefit me as well in understanding customer issues, in understanding what's working, which services are needed, what time.
Collaboration is very, very important because data is everywhere, and everyone has a docket of a part of the data that needs to be shared with others. So, and the data, the aggregation of the data will be meaningful if there is that facility for people to share the data, and sharing that would require that different stakeholders understand the need of sharing data, and also understand how and what they can do with the data. So it requires, again, I think, that we better understand what we can do with the data, but more specifically, establishing mechanisms for sharing data from one point to the other. But also the integration, the facility I was talking about, even if there are that willingness to share the data, but do we see any mechanism in place? Do we have the facility that will accommodate, would facilitate people to share the data? So these are the key important aspects that we need to be touched on by different stakeholders. So there is a need for different stakeholders operating on the financial ecosystem or financial market to really have that as a priority. Prioritize the data sharing, prioritize the cooperation in line with sharing the data, so that, and we are seeing that happening. So we can see the platform being established, how information is translating from one point to the other. So I think we are seeing that coming. But, and again, I think that's where the future is driving us to.
And that wraps up today's episode of The Business Age on data integration into the financial sector. Thank you so much for tuning in. You are with me, Naringwa Fiana Mothoni.